Trying to understand financial obligations, especially nowadays, can feel a bit like you're lost in the woods sometimes.
Yeah.
There's a path, but all the details, all the jargon, it can really obscure things.
Oh, absolutely. And then you add modern tools like owning shares, and suddenly there's this whole other layer of complexity.
Right. You want to make sure you're doing things correctly, applying the right principles to your specific situation, but cutting through all the noise, well, that's the challenge.
Finding what's actually relevant.
Exactly. And that's precisely why we're doing this deep dive today. We're going to get into the specifics of Zakat obligations when you own shares.
Yeah, whether you're holding them for the long haul, as an investment, or if you're more active, trading them regularly.
And we're basing this discussion on the material you provided us. It's a PDF source that really digs into Zakat specifically for investment shares and trading shares.
That's the one. Seems quite thorough.
So our goal here, our mission, if you like, is to unpack the main ideas from this source. We want to highlight the really key differences in how Zakat works, depending on why you hold those shares.
And hopefully help you walk away understanding the most important takeaways from this particular document.
Okay, then. Let's dive in.
Right. So the source kind of sets the scene first. It talks about how modern corporations, what it calls shurikat, sishuso, became common. And naturally, scholars then needed to figure out, well, what are these from a Sharia perspective? And crucially, what does it mean for Zakat when people own shares in them?
Okay.
A really key point the source makes right away is that, okay, legally, a share might just look like a document, a piece of paper representing capital. But from the Sharia view it discusses, that share actually represents your proportion, your slice, of the company's real assets.
Okay. So it's not just symbolic. It's tied directly to what the company actually owns, the buildings, the cash, the inventory, whatever it might be.
Exactly.
And Zakat itself, that's fundamental. It's a pillar of Islam, an obligation on wealth once it meets certain conditions, right?
Right.
Like reaching the minimum amount, the nisab threshold, and holding that wealth for a full lunar year, the whole.
Exactly. So shares, they can definitely fall under Zakat if your total wealth meets those conditions. No question there. But, and this is important, the source really stresses that applying Zakat to shares isn't just one simple rule for everyone.
Okay.
The critical thing, according to this material, isn't just owning shares. It's about your intention. Why do you have them? And also, what is the company actually doing?
Right, the intention.
Yeah.
That seems key. But it also raises that question. Who's actually responsible for the Zakat? Is it the company? Is it me, the shareholder? Maybe both.
Yeah, the source touches on that. It brings up this concept of kulta, which is basically mingled wealth.
Yeah.
It suggests that if a company calculates and pays Zakat properly on its own zakatable assets, its cash, its inventory, money owed to it.
The business assets, basically.
Right. If the company does that, it might fulfill the shareholder's Zakat obligation, but only for the part of their wealth tied up in those specific assets the company paid on.
Okay, so that's a possibility.
It is. But the source points out often that doesn't happen. Either the company doesn't pay Zakat that way, or maybe it does, but the shareholder still needs to sort out their own calculation for various reasons. And this is where the source makes this really fundamental split, the core distinction that changes how you calculate Zakat on your shares. It all comes down to, are you holding these shares for long-term investment, or are you holding them for short-term trading?
Okay, this is the main crossroads in this document then. So let's take the first path. Holding shares for long-term investment, or koyuhon. What's the rule there, according to the source?
Well, if your intention is to hold on to those shares for a long time, maybe you're looking for dividends, or you believe the company will grow in value over years.
You're in it for the long haul.
Exactly. Then the source says these shares are treated kind of like you've invested capital in a partnership. Your ownership is linked to the company's actual underlying assets.
Okay, like a partnership. So how does that affect the Zakat calculation, assuming the company itself isn't paying Zakat on those assets?
In that case, the source explains, you calculate your Zakat based on your percentage of the company's Zakatable assets.
My share of their stuff.
Your share of their Zakatable stuff, yes. You'd need to figure out what percentage of the company you own, and then find out the value of the company's cash, inventory, receivables, things like that.
Right.
Your Zakat would be 2.5% of your portion of that specific value, assuming, of course, your total wealth is above the nisab threshold.
And how do you find that information?
The source suggests looking at the company's balance sheet, or maybe they issue Zakat reports if you can get them and trust them.
Okay, so for investors, Focus on your slice of the company's actual operating assets, cash, inventory, receivables. Got it. Now, what if the company does pay Zakat on those assets? You mentioned that possibility earlier.
Right. So if you're holding shares purely for investment, and the company does calculate and pay Zakat correctly on its zakatable assets following Sharia rules, then the source indicates that you, the shareholder, are generally considered covered for the Zakat on your share of those specific assets.
Okay, that simplifies things for the investor if the company pays. So investment shares tied to company assets. But the source makes a big deal about the contrast with shares held for trading, or ukanye. How does the calculation change if you're buying and selling frequently, aiming for profit from the price swings?
Yeah, this is where the source applies a completely different logic. If you're trading shares, your intention isn't primarily about the long-term health or assets of the company. Your goal is to profit from the buying and selling of the shares themselves.
So the shares become the product you're dealing in.
Exactly. And because of that intention, the source says these shares are treated like trade goods, wunurdo,
Like inventory in a shop.
precisely like inventory. And
Yeah.
the standard Zakat rule for trade goods is that you pay Zakat on their value.
Their market value.
Yes. The source states that for shares you hold with the intention of trading, you calculate Zakat as 2.5% of the total market value of those shares on your Zakat due date.
Okay, that's quite different. Investment looks at underlying assets. Trading looks at the market price of the share itself on your Zakat day.
Correct.
Now, what about that company's Zakat payment? If you're a trader and the company happens to pay Zakat on its assets, how does that fit in, according to this source?
This is a specific point the source clarifies. Even if the company pays some Zakat on its underlying assets, if your intention is trading, your main Zakat calculation is still based on the market value of your shares. That's the starting point.
Right.
However, and this is the nuance the source says, you are allowed to deduct the amount of Zakat the company paid on your behalf related to your portion of those shares from the total Zakat you calculated based on the market value.
So you figure out 2.5% of the market value, but then you might subtract what the company already paid on the asset portion related to your shares.
Exactly. You'd pay whatever the remaining balance is after that deduction.
Wow, okay. So that distinction based on intention is absolutely critical here, isn't it?
It really is, according to this material.
If you're investing long-term, company Zakat might cover you for those assets. If you're trading, you calculate on the market value first, but then you might get to subtract the company paid Zakat related to assets from that final number.
That's the framework presented. The source fundamentally links everything back to whether you see the share primarily as ownership in the company's productive assets, that's investment, or as an item you intend to sell for profit, that's trading.
It's linking the intention to two different categories of wealth recognized in Islamic finance: capital or partnership assets versus goods held for trade.
You've got it. Each category has its established Zakat method. The source often implies, though not rigidly, that how long you hold the shares can be a strong indicator of what your underlying intention actually is.
Okay, so reflecting on all this, what does this really mean for someone listening, looking at their own shares?
Well, this deep dive into the source really gives you the essential framework it proposes. It makes it clear that for Zakat on shares, based on this document, the very first question you need to ask yourself is about your intention.
Why do I own these? Am I primarily an investor or am I primarily a trader?
Exactly.
And figuring that out then directs you to the right calculation method described in the source. For investment shares, look at your proportional share of the company's zakatable assets, cash, inventory, receivables for trading shares. Use the market value on your Zakat date, but potentially adjust for any Zakat the company paid on its assets, using the method outlined in the source.
Yes, that's the path this material lays out. It provides a way to approach your Zakat related to shares, guiding the calculation based on your actual financial activities and intentions as interpreted by this source.
It definitely provides a clear structure based on that core principle of intention. So as we kind of wrap up this discussion based on the source material, here's maybe a final thought to chew on, something that builds on what we've explored. Given how fast financial markets change, and we see all these new digital assets, completely new financial instruments popping up, how might these fundamental principles we've just discussed, this emphasis on the underlying intention, investment versus trading, and the nature of the asset itself, is it ownership in capital or is it more like a commodity for trade? How might those principles apply when we try to figure out zakat for future forms of investment, things we maybe haven't even conceived of yet?
That's a fascinating question, applying timeless principles to novel situations.
Yeah, something to definitely think about as you continue to navigate this
Yeah.
this ever-evolving financial world.